Hello, valued clients of Allison Wealth Management. I have some exciting news that could significantly impact your financial future. On Friday, President Trump signed the One Big Beautiful Bill into law, the most comprehensive tax reform legislation we've seen in years. This isn't just another tax bill. It's a game changer that creates immediate opportunities to reduce your tax burden and enhance your wealth building strategies. Many of these changes take effect immediately, which means the decisions you make in the coming months could save you thousands of dollars this year alone. I want to share with you some of the key changes that will likely affect you and explain why meeting with your advisor at Allison Wealth, whether it's myself or somebody else on our team in the coming months, isn't just a recommendation, it's essential. So let me start with some of the changes that could put money back in your pocket right away. If you're 65 or older, you now qualify for a new $6,000 tax deduction per person. For a married couple where both spouses are 65 plus, that's an additional $12,000 in additional deductions. If you live in a higher tax state, the SALT, state and local tax deduction cap, increases from $10,000 to $40,000 for the next 5 years, but only if your household income is under $500,000. So there's a lot of planning for clients that are on the cusp. This change alone could save qualifying families $7,000 or more annually. If you're building wealth for future generations, the estate tax exemption increases to $15 million per person and is now permanent. This means a married couple can pass $30 million to heirs tax-free, providing certainty for your legacy planning. So we're engaged in a lot of advanced trust planning to help protect those large taxable estates. For investment strategy, the Section 199A qualified business income deduction is now permanent, meaning if you own a pass-through business or partnership, you can count on that 20% deduction for years to come. This stability changes how we structure your business investments. There's also very specific phase-outs in business eligibility, so a lot of planning to be done here. Qualified Opportunity Zone investments are extended and enhanced as a way to continue to defer capital gain realization. The window, though, for optimal benefits has specific timing requirements that we can discuss with you. There's also what's known as a dead zone this year and into early next year before we can really start applying the benefits of Qualified Opportunity Zone investments into 2027 and beyond. For those of you who own small businesses, Section 1202 qualified small business stock gets additional enhancements, potentially allowing you to exclude up to $15 million of gain from taxation when you sell those qualifying investments. For your business interests, if you own a business, 100% bonus depreciation is now permanent. This means immediate full deductions for equipment purchases, which can dramatically improve cash flow and reduce current year taxes. There's also some strategic strategies we can deploy here to help reduce your overall tax liability. Research and development costs can be immediately deducted again, rather than spread over 5 years. So if your business is investing in innovation, this creates substantial tax savings. For many of you, we can even go back and amend prior year returns to try to recapture some of those R&D tax credits. For your family's financial security, the child tax credit increases to $2,200 and is permanent, providing more predictable benefits for family planning. There's some increases to the dependent care credit. If you work in industries where you receive tips or overtime, there's new deductions that allow you to exclude up to $25,000 in tips and $12,500 in overtime from federal taxation. There's some expansion on health savings account eligibility, creating more opportunities for tax-advantaged health savings, specifically for those of you that have retired and are on marketplace health insurance plans before Medicare kicks in. So here's what makes this urgent. Some of these benefits phase out at specific income levels. Others have optimal timing windows that close quickly. The new charitable giving rules, enhanced adoption credits, and energy tax credit phase outs all have specific requirements that need immediate attention if you're planning on taking advantage of them. So here's the bottom line. According to the government analysis, this legislation provides $600 billion in new tax relief, with the largest proportional benefit going to middle-class families, but a lot of opportunity for high net worth, high income professionals, and our ultra high net worth clients. But the benefits don't happen automatically. They require proactive planning. Your team at Allison Wealth has been working around the clock to understand every provision and develop personalized strategies for your situation. As you know, we're not just managing your investments, we're optimizing your entire tax and wealth building strategy. Your financial future depends not just on what you earn, but on what you keep. And these new laws create unprecedented opportunities to keep more of your wealth working for you and your family. If you have any questions at all, contact your advisor today. We're going to be reaching out to many of you to talk about how these tax changes can impact your taxes, not only in 2025, but beyond. And if you're currently not a client of Allison Wealth and watching this video, please reach out to our team today to learn more about how we can help you protect what's taken you a lifetime to accumulate.